Welcome back. Still watching Business Incorporated right here on Channels Television. And yes, we delve into that decision that was made yesterday, 200 basis point increase on the MPR for March until we meet again in May, according to the announcement of the central bank governor. But let's look at those details, scrutinize the factors and what to expect between now and March. And we're doing that with the Chief Executive Officer of the Center for Promotion of Private Enterprises, Dr. Muda Yusuf. Dr. Yusuf, good afternoon. Thank you so much for joining us in this studio. So was it within your expectation, the 200 basis points increase?
Actually, I was expecting a hold because, you know, when there is too much of tightening, it can result in suffocation. The tightening that we had in February was really quite significant, both from the perspective of the interest rate, I'm talking of the policy rate, and the perspective of the CRR.
I know you're very passionate about the CRR.
Yes, because increasingly we seem to be disconnecting the banking system from the real economy. That is the major worry now. Because the whole essence of banking is to support investment. And I'm talking about real investment. I'm not talking about investment in treasury bills and all these other financial instruments, because those things don't create jobs. Those things that create jobs increasingly are finding it extremely difficult, you know, to cope with the credit condition as a result of this tightening. Admittedly, there are some positives because typically economic policies have pros and cons. They have merits.
They have downsides too.
Yes, of course.
Which is why the CBN governor keeps saying that, I mean, they are aware that the price to tame inflation is growth. And they are ready to give that up at least until we see that inflation starts, you know, decreasing.
But the point to make is that we need to define the limits of how far the tightening should go. And we need to also reckon with the reality of the limitations of monetary policy in this environment as far as, you know, taming inflation is concerned. The reality is that there is a major component of supply-side issues in all these equation dynamics. And if you are coming from the mindset as if the monetary policy instruments will exclusively deal with this situation, then a lot of damage will be done.
Yeah, I think the CBN governor also said that yesterday. Yes, he talked about the agriculture, the security, and all of that.
He said it, but the rate at which the tightening has been going, I mean, look at, for instance, the implications for financial intermediation. The whole essence of a bank in a normal economy, I'm not saying this economy is abnormal, is financial intermediation. That means you channel resources from the surplus end of the economy to the deficit end of the economy. And we know that in this economy, there's a very huge financing gap. A lot of sectors are yearning for financing, affordable financing. Now, you already have CRR at 45%. That means from the deposits you have, 45% of it is out. You have liquidity ratio at 30%. That means from your deposits, 30% should be kept in liquid assets. If you add the two together, you are talking about 75% already. So the banks have just about 25% to do business. So already, that's a major risk to financial intermediation. And it's even a risk even to financial inclusion. And such trends has a way of decoupling the banking system from the real economy.
But how do you see this being handled? Because, I mean, even if there's a lot of economic activity and people are making money, the inflation keeps eroding the value of that money. So how do you think there can be a balance?
You see, there are arguments on both sides. If there's a lot of economic activities that increases output, an increase in output can moderate inflation. That's a reality. Now, look at the scenario now. Prime lending rate, that's the rate for the premium customers, as at February, was about 26.6%. Prime lending rate.
As at
February.
Okay, that was before the hike.
Before this hike.
Before the first hike.
No, before
this second one.
Yes, before the second hike. 26.6%. That means that for SMEs, you'll be talking about 30% in terms of lending rate. That is before this hike. Now, tell me what business you will do in this economy as an investor, either as a manufacturer, as somebody is in the agri sector, as somebody is in real estate or construction, even in trading. What business will you do to give you a return of 30%? What business?
So what can we do?
So when you have that scenario,
yes,
you already have a major issue on your hand. That means these sectors have no business approaching the banks.
So I'm wondering, Dr. Yusuf, I'm wondering what Ghana did when they went from more than 50% inflation to now to their 20s. Perhaps we could learn from that.
We could learn from that. But I don't think what Ghana did was exclusively dependent on monetary policy issues. You know, they had all sorts of programs with the IMF and all these international organizations. Because one of the major considerations for all this tightening is about exchange rates. And we must commend the progress that has been made around the exchange rate. I mean, we have seen some improvement over the last 2 weeks. But whether we can ascribe these improvements exclusively to this tightening, it's a different thing.
Yeah, somebody said we should be careful because we see the CBN intervening, and that might be why we see this. And it is costing us when we look at our foreign reserve.
Well, the whole essence of a reserve is also to support your currency. So we should not be counting it so much as a cost. What is important is to be able to manage the situation sustainably. And I'm sure the CBN is on top of that. And in addition to that, over the last 2 weeks, we have seen a whole lot of intervention by way of these several circulars from CBN, trying to curb all manner of malpractices within the system. Because there are also people issues. Apart from these issues about supply and demand, there are also people issues, people who are manipulating the system, people who are speculators. So unless we also deal with them, they may continue to create distortions in the system. So that also has helped the situation. So there's a whole lot of factors. But my concern is that we should not tighten to the point of suffocation. You know, to the extent that, I mean, imagine people who are already indebted to the banks, who have ongoing projects. That means those projects are already dead on arrival. If you have taken money from a commercial bank to set up either a farm or a manufacturing industry or whatever business, and you have this kind of interest rate, sometimes the business has not even taken off. You're already paying back. I've heard stories of people whose projects have gone under because of all these macroeconomic headwinds. But they borrowed money to fund the projects. Now, on top of the fact that the projects have gone under because they are stalled, because of all these macroeconomic issues, the money they owed, the cost is being revised. And you know how this system is. When you are dealing with the banks, there is no human fully on human consideration.
You have to stay formal.
Yes.
But,
it's a very mechanistic relationship.
I mean, everybody now agrees, because even when we listened to the CBN governor yesterday, of course, he did talk about the fiscal side, the need to deal with issues around agriculture supply, insecurity, which might explain why the former CBN governor did a lot of intervention. So it becomes kind of frustrating for a CBN governor when you know your limit is just within the monetary policy, but major contributors to the inflation that you're trying to deal with is on the other side, on the fiscal side. So I wonder how, for instance, the CBN hopes to hit its 21.7% inflation target that it set for itself.
Well, that is why I feel that the CBN should also be more measured in its application of some of these tools, monetary policy tools. Because there's only so much you can achieve with monetary policy. So the point he made in the communique about the fiscal side is valid. So we should be seeing more action in terms of that coordination and complementary fiscal policy measures, so that the monetary policy instruments or the monetary policy institution is not running faster than the fiscal policy angle. Because you'll be hurting those for whom the financial system is also supposed to support. Now, you talk of liquidity. What are the sources of this liquidity? Have we done any empirical study to establish that this liquidity is coming from credit creation? Because there's how much people have access to bank credit anyway. You know? And we know that over the last few months, we have seen a lot of improvement with respect to government revenue at all levels of government. That's a major source of liquidity. How do we manage that? So
you think that's also feeding into this inflation?
It's feeding into it. Because all this monetary policy tightening, they are not borrowing money. It is their own money, so they can spend it. It has nothing to do with whether you are hiking MPR or not. It is their money. It's not borrowed funds. They can spend. You know? Then when you look at the data, surprisingly, even credit to government seems to be increasing. It came down drastically in October to less than 10 trillion. But if you look at the data for February, it's over 30 trillion.
Why that?
So it seems that we also need to interrogate what is feeding into that. Because I know that one of the major points that the CBN had made is to, keep this ways and means financing extremely low. And the CBN governor has been doing that. Unless it's a mistake. But the data is showing over 30 trillion in terms of credit to government in February.
So
it looks like January. So we also need to look at that side to be able to determine where this liquidity is coming from.
That's feeding into this inflation.
Yes.
Because even the CBN's outlook says that we're going to have inflation numbers by middle of next month, and it's going to surpass 32 trillion. So, 32%. Yeah. So, it doesn't look like we're coming down anytime soon, it seems.
No, that is why we need to worry about other drivers. For instance, we should be looking at things like the exchange rate for the payment of import duty.
That's constantly changing.
Yes, it's something the business community have been complaining about. And I'm appealing to the CBN in conjunction with its fiscal authorities. They should have a second look at it. Because that is also feeding into this inflation problem. Because if you struggle to get your forex at such a very high rate,
then of course
then
you have to add that.
Pay duty at also a very high rate.
Then the consumer will pay for it eventually.
The consumer will pay for.
All right, Dr. Yusuf, we have already gone more than we should. Dr. Muda Yusuf, Chief Executive Officer, Center for Promotion of Private Enterprises. Thank you so much for always making time for us. We really do appreciate that.
Thank you, Ine. Thank you.
All right, so now we head to the market with Aniti Edet to see if the market or investors have started reacting to those numbers yesterday. But let's take a breather. We'll be back with the markets.